Hello everybody, hope that you are good. Today is FOMC day and you know what that means. It means volatility. But I don't think it's a type of volatility that you want to trade in advance because you don't really know what it's exactly going to be said, how the market is going to react to it, and if it's kind of gambling. So in my opinion, if FOMC is at 6 p.m. UTC time, then in my opinion, and this is what I've always been doing with the news announcements, is to not trade 30 minutes before the news get released and 45 minutes after the news are released. So not only in this case of the FOMC, not only the FOMC statement and the interest rate decision, but also the press conference. Okay, we're gonna go now into a bit more of detail. But today you're gonna have at 6 p.m. the interest rate decision, and you're gonna have also the FOMC statement. This probably is not going to bring any volatility because the market is clearly expecting that they are going to pause rates. So that's priced in. It's not going to move the market. But at that exact time, also 6 p.m., they are going to release the dot plot, FOMC economic projections, okay? And that can give you an idea of what the Fed members are expecting in terms of new hikes, for example, or a rate cut. So I think that the main question of the day regarding the dot plot is the Fed still supporting the idea of a new hike this year? Okay, and we only have a couple of months left before the year finishes, okay? So that's the question. Are they projecting a new hike? Because that was what they were expecting in the previous dot plot. They said 2 more hikes. We only saw 1. Okay, there is 1 missing. So now that it's kind of like an update of that economic projection, are they still expecting the same? Okay, 1 more hike. That's the question. All right, and that is where the volatility is going to come from. Also, of course, the press conference 30 minutes after this. So on Twitter, I'm going to be active. I'm going to read the dot plot. I'm going to read the FOMC statement. I'm going to give you my opinion about it. And then at 6:30 is the press conference. That's in live, so we're going to be watching it. And that's also where we could see some volatility because, of course, I'm going to ask him about the dot plot that he's just released 30 minutes before it. And also, there are things that they're going to ask him. For example, what is going to happen with inflation if the gasoline prices keep going up? Go to the oil chart. It keeps going up. It's at $90 a barrel right now. Yesterday it went all the way to $92, $93. Okay, so that is going to be a massive problem for the next CPI report. This month the oil prices have gone up at 10%. Okay, last month it went only less than 2%, and still CPI, went higher than expected. So what's going to happen in the next inflation report? Also, of course, I'm going to ask him his opinion regarding rate cuts. When are you going to see rate cuts? Because we're going to go right now through what the market is expecting, okay, regarding rate cuts. And I think the market's opinion about rate cuts is going to change today quite fast, in my opinion. I think we might hear some surprises, and I think the market's opinion is going to change right after the press conference. So we're going to go through that in a minute. Let's go. The chart that we have in front of us, it's the probabilities that the market gives to the next target of interest rates, okay? So you can see that in today's meeting, they are expecting, 99% of the market is expecting that they are going to hold rates here, okay? And this tool, CME Group, go and Google it, it's free. And to be honest, it's very accurate, okay? Or at least in the past 5 or 6 FOMC meetings, I can tell you that they haven't failed. And I've never seen something as high as 99%. So I truly believe that, they are going to hold rates today. That's not news. That's what the market is expecting. Everybody is expecting that. It's priced in. The market is not going to move up or down based on this because this is priced in. But at the same time as they announce the interest rate decision, they are going to release the dot plot. And that is where the volatility is going to come from. So that is where you have to pay attention to. All right. And we're going to check this chart before and after the FOMC meeting because I'm sure we're going to see changing, and that can give you an idea of the market sentiment getting updated. All right. So let's continue. What are they expecting in the next meeting, 1st of November? Well, they're still expecting that they are going to pause rates. Okay, 70% of the market believes so, but you should have a 29% thinking, there could be a new hike. Okay, this is what I think this chart might change. Okay, basically the dot plot is going to be the key, because if the dot plot is still projecting one more hike this year, then this is going to change dramatically. Maybe it becomes even the opposite. Okay, 30% holding versus 70% new hike. And even more, if Jerome Powell comes at the press conference and says, hey, we're worried about next month's CPI report because the oil prices have been going up non-stop. So we're going to be data dependent, but it's not looking good, and I can't discard a new hike. So if that's the case, the dot plot announcing that there is still going to be one more hike this year, and Jerome Powell hawkish and worried about the inflation report next month, then I think this is going to completely flip. 30% holding, 70% new hike. Okay, that's I think where the first surprise could be, to be honest. And then you can see that in December, the market is also expecting that they're going to pause rates, but 35% are thinking, hey, there might be a new hike, and 35% in December, it's more than the 29% in November. So this is telling me that the market is thinking or is expecting that the Fed is not going to increase hikes again, but if they did, then it would be in December and not in November. And I think this is what it might change also today. All right, let's see the dot plot. Let's see what happens. But volatility is guaranteed, guys. There is going to be a lot of volatility. So I recommend you to not have any positions open before the data comes out. Wait at least 30 minutes after the press conference, or 45 minutes. So if the press conference starts at 5:30, it probably finishes at 7 o'clock UTC time. So perhaps wait until 7:30 or even 7:45, okay, UTC time. That's my plan. Until then, we want to be watching the markets. We want to see why it's unfolding. If there is going to be a false move before the FOMC, that maybe can give you an idea of what it might actually happen next, okay? And then maybe we can start trading some imbalances that are going to be created with that volatility, with the press conference and the dot plot, okay? So you have to try to understand and choose when you're going to be an aggressive trader and when you're going to be a conservative trader. And in my opinion and in my experience, and this is not financial advice, but this is why it works for me the best. When there are news announcements, I'm conservative. I'm not placing any trades until the news are released or the data is released, okay? Then I can trade imbalances after the dust is settled, and that is my plan for today. I'm waiting until everything gets calmed, and then I might try to trade some imbalances. I hope that's clear. So now we're going to go into the Bitcoin chart. We're going to try to make sense of the next potential moves. This is the Bitcoin chart, guys, daily time frame. You can see what happened yesterday, and is that we closed the candle above the daily 50 MA. Now today is the day that we're going to know if this is a deviation or if we're going to test it as support. This is what we are currently doing, and price is going to continue going higher. But for that, we have to wait until the dust settles after FOMC, and that's going to give us an idea of why it's currently going on. All right, because yes, you can see that the daily 50 MA, it tends to act as a good resistance support level, and you might be using a different EMA. That's fine. Choose your levels, but you can see, for example, here it's been tested at resistance all the time. Price drops. This here, that's a deviation. Is this a new deviation? Okay, you can see that it doesn't get tested as support. When it goes to tested as support, it falls through. It falls off. Okay, so that's the question. Are we seeing that today? Is this candle going to hold above the daily 50 MA? Because if it does, then where do you think we're going to be targeting, guys? Well, of course, if this holds, if we can hold the mid-range and the daily 50 MA, also, by the way, notice how we're holding at 27,000 exactly, psychological number, because it's a round number before the news are released. This is something very common. They like to hold price before CPI, before FOMC at a round number, and then they're going to move price up and down. Because if I tell you, price has dropped to 26K, even if it's 26,900 for your eyes, that's a $1,000 difference, even if it's not. Okay, it's all psychological, guys. So that's the first thing. They are holding above this level for now until the news are released. Now, if Jerome Powell is not hawkish, and he's actually dovish, and maybe the dot plot is not expecting new hikes, if that happens and they say, look, this is the top of the hike cycle, then I think we're going to hold above the daily 50 MA, and price can continue going higher to the range highs, 28,300, okay? Because this is a range. It was a range, and it is still a range. Also notice how the liquidations are in the 1 month time frame in high block capital in this zone between 28,300 and 28,500. So that is going to be the next natural target if the FOMC supports this theory. However, if we see Jerome Powell very hawkish and serious and concerned, and he says, look, the dot plot says we're going to hike, if so, okay, if he says that, and we're probably going to hike next month, then the market's going to react to this, and what they're going to see, we're going to see a sell-off, all right? And there's going to be a deviation. The daily candle will close below the daily 50 MA, okay? And that might be telling you we're going to go again to the range lows. And today is going to be a lesson for many of you. And I think today is going to be a great example of sometimes you don't really need to know where the market is going next, because in this case, you know, I'm not Jerome Powell. I don't know what he's going to say. So I don't know what the consequences of his speech might be in the Bitcoin price. So I don't really need to know where price is going to go, because it's impossible to know when you have, you know, news announcements and data that doesn't depend on you. But what it matters is that you know how to react to it. Okay, so to me it's as simple as that. We hold above the daily 50 MA, then we go to the range highs. Do we lose the daily 50 MA and we also lose the mid-range? Then, you know, probably we're gonna get maybe a retest even, maybe even not, and then drop to the range lows in the next few days. Okay, it's as simple as that, guys. Sometimes you don't really need to know why it's exactly going to happen, okay, or the direction. But if you know how to react to why it's going to happen, then you're still going to make money of that. All right, so that's what I think for Bitcoin in terms of price action in higher time frame. Now, if we go to the 4 hours time frame, let's see if I can see anything. I mean, I can see that we haven't really retested the 50 MA in the 4 hour time frame support for quite a while, since literally 1 week ago. So again, it's likely that today we see price, you know, hitting this zone, at least a support with that volatility that we're gonna see today. If the news are bad, then we're gonna fall off this, okay, and you're gonna go to the range lows. But at least I think we'll test this level, okay. I do think that even if we go higher with the volatility of the moment, we're probably gonna test this level and then go higher, okay. But this level should get tested today, I think, 4 hour 50 MA. That's what I think. There's a chances of literally probabilities. I mean, we haven't tested the level for a week, so it will be normal to test it again today, okay? That's what I think. Next, 1 hour time frame, right now above support, no clear bounces, nothing really going on. I mean, you can see some candles to the upside, big candles, but price not progressing any further, okay? You can see those three. So that's telling you that there is not yet an intention to break through this zone. And I think that's clearly because they're waiting for the news announcements, okay? But the question is the market maker building shorts already? Was he building shorts in advance from Monday? That's a good question, I think, okay? Because look at these large candles. So maybe they could give you an idea that, you know, we actually might go lower. All right, so keep an eye on that. Let's see what happens today. But in the 1 hour time frame, that's the real information that we can extract, okay? And then in the 15 minutes time frame, I don't see any clear scalps. I mean, you could scalp just the bounces of the 27,000 zone, which is a psychological number that they want to hold until the news are released. So that's the only thing that I can see, that you want to, you know, long these scalps here from 27k to maybe 27,150 or so. Okay, nothing much going on, not even worth taking anymore, to be honest. So if I look at this chart, the only thing that I'm thinking is I need to be patient, okay? I need to wait until the dust gets settled today, because you can see that in this price action there is not much really to trade except these little scalps here, okay? That is the only thing that you could have traded in terms of a scalp since yesterday, okay? Not much really going on. So I'm gonna wait at least 30 minutes after the press conference is released, and then we'll see what they leave us with. If they don't price then aggressively, for example, they're gonna leave here some liquidity pools, okay? And then if price, consolidates, and I can already start to see here, for example, wicks to the downside, but price not progressing any further, or I see, I don't know, an engulfing candle, or something that tells me we're going to reverse and retrace these liquidity pools here, then that's when you can open a long, okay? Even if it's a small long, well, this position will be quite big, but even if it's smaller, you can still make money off that, okay? Even if it's a scalp, but I'm targeting more as a day trade if they leave some big liquidity pools behind. And of course, this also applies to the upside, okay? If you see this, okay, and then you see wicks to the upside, price not progressing any further, then you can target a reversal towards these liquidity pools, right? So that's, I think, the type of trade that I'm trying to look today. Just retracing imbalances that are left behind, but not positioning myself in advance before the news are released, because in my opinion that's gambling. You don't know what is going to be said, okay? So be very careful with your risk management, be patient, and again, don't try to figure out what the market is going next. Just react to it, especially in days like today. In other days, yes, that's what technical analysis is about. We're trying to understand where the market is going next. But today, it's purely fundamental analysis. And it's, for example, if Jerome Powell mentions the word recession 10 times, the algorithms react to it because they react to keywords. So how do we know if Jerome Powell is going to say the word recession 10 times, for example? We don't know that. So no point trying to guess what is going to happen, but instead better try to react to the price action, okay? And then in terms of the weekly time frame, we're going to go through this again on Friday evening, but it would be quite bullish and very important if we manage to close this weekly candlestick above the weekly 50 MA, because you can see how this is a strong support and resistance level. Check this out, okay? Resistance, sell-off, support, pump. Also here, resistance, okay? So now, if we can push above this, close the candle above the weekly 50 MA, test it as support, or even consolidate here, then, guys, it's very clear. We're going to go to the range highs, and if we break the range highs, you can go even higher and break these highs, okay? That's when you can be bullish, but you need the weekly candle on Sunday to close above the weekly 50 MA, okay? That's especially for position traders, holders, swing traders, okay? Meanwhile, day traders, we are the traders. I think the key time frame today is going to be what is going to happen in the daily time frame, okay? What is going to happen with this daily 50 MA? Are we closing above it? Then tomorrow will favor higher prices. Are we closing below this? Then tomorrow will favor lower prices. It's as simple as that. Meanwhile, for scalpers and also day traders, go today after the news have been released. Go to the 1 hour time frame, 15 minutes time frame, and try to see if they leave any big liquidity pools behind, like this. I don't care even where it goes. And then you can already start to see here, if it's to the upside, some bullish signs. Or if it's to the upside, you can see some bullish signs. Then your goal is to aim to retrace these liquidity pools after the news, okay? And you can go through the past FOMC meetings, CPI reports, and you can see how this is usually the case, all right? Even you might see, this is also something very common, a false move, dump, consolidate, retrace the liquidity pools. Also very common, okay? Or to the downside, I'll do it for you. False move, pump, consolidation, retrace, okay? Something very common. Just check the price action of the previous FOMC meetings and CPI, non-farm payrolls. That is usually what happens, okay? So I think I don't want to make this video any longer. I think I've been clear with my opinion and my analysis. So I hope that it helped, guys. Thank you so much for watching, and I'll see you soon.